Good morning. This is the weekend update for Buy Sell Short for Saturday, July 26. Another weekday on Wall Street. Pretty decent sized down move on the Dow that kind of spilled over to the rest of the indices. Big driver of that, some disappointment at earnings. Amazon down pretty big when it came out and said they're going to lose 400 to 800 million in the next quarter. So for now, the bloats are getting a little bit of the air taken out of them. Big reason for the drop down in the Dow was Visa earnings disappointed. That stock was down 10 plus on Friday, which was a big reason we saw the Dow and the financials do so poorly. But as you can see here on the daily chart, we've fallen right back down to that uptrend line that's been in place since April and just above the 50-day moving average. And this is the zone that we're really going to pay attention to. I would say 16,800. If we were to break that zone, we could be, looking at some possibility for 300-400 point downside move. Now, the sell-off this last week has come on lower and lower and lower volumes. It's just been that kind of market. There is no volume out there. It is an extremely random market. You could have 5 stocks with the same chart set up. You would need to buy all 5 just to get 1 or 2 to actually break out like they should. It's just that kind of market, which means we don't press our bets. We only play a few stocks, and we go from there. And Friday actually ended up being rather good. We had a couple of our plays go up nicely. We'll go into that in a little bit. Quick mention on the 15-minute chart. You can see we broke down out of that wedge, and we formed another little mini wedge down here. So we need to watch closely to see if this 16,900 level closes or holds on Monday. If so, we could see, we've got the possibility for a 100-plus point bounce back up. That's the way this market has been all summer. It looks like they are going to pull the rug out and the market is going to implode, and then the next day the shorts get bent over and the market goes back up like absolutely nothing happened. So, Monday's going to be really, really interesting. If we look at the chart of the Russell, we had really high hopes going into this week that we were going to see the start of that summer rally in the small caps like we've seen in all the other indices. Started off well and then kind of sputtered late in the week. And here we find ourselves right back at the 200-day moving average. This zone has become a big magnet for the Russell. So one of two things are going to happen in the next week or so. We're going to finally bust free out of this magnet zone, or we're going to break down and possibly see about, there's the possibility of 5-10% down move if we do break this support line again. So fingers crossed that does not happen, that what we simply saw was the big sell-off, market bouncing back up to the 20-day exponential, which is always the bounce magnet, retracing that bounce and setting up for another move higher next week. So fingers crossed that is actually what we are going to see. Dow Transports, despite the market or Dow being down pretty big, the trans keep chugging higher, and that's the indice we monitor. And, until we see a significant breakdown in the Russell, under the 50-day moving average, I think we're fine and dandy. So this is the indice that we are going to pay very close attention to decide if we've got to get even more cautious. Although with this lack of volume in the market, it is not like we have a lot of capital deployed anyway. So I think irregardless, we're in pretty good shape right now. As for some stock plays, very nice day on Friday. ROX. This is a stock we've been watching for the last week with a couple of trades in it. Break through the 50-day and even more key, the break through the 200-day moving average on Friday. That's why the email alert went out. And I haven't sent out a whole lot of email alerts in the last month, so pay attention when those alerts come out. ROX broke through that 91 cents and it just chugged higher and higher. Once it broke through 95, it was off to the races. 10 times average volume on ROX, 3.3 million shares almost. 10 times its average volume on a Friday with the market down big and no volume in the market. That is significant. As I mentioned in the email, Zacks was out pointing that their earnings estimates have gone from negative 1 cent to break even that had not been reflected in the stock price. And there's very few liquor stocks left as public companies. There's been a big consolidation wave in that sector over the last few months, and there's only like I think 5 of them left, and Rox is the only small cap. All the others are mega cap plays. Their booze sales are growing big time. Just read their last earnings report. Their rum is going boom. The thing you don't hear talked about a lot is their ginger beer. Now, one of the drinks, I'm sure you've heard it, the drink of the day right now is Moscow Mules, which uses ginger beer, and their ginger beer is blowing up. They also have rum, and their Irish whiskeys, which I actually like, are blowing up as well. So these guys are in a growth move right now. They picked up some very nice brands over the last year or so, and this is a stock, like I said in the email alert, we've got a first target zone up here in the 120s, but this is a stock that can see 150 plus and still be considered very, very cheap. And we even got as high as 110 on Friday. And typically when we see a stock break $1, 120 plus comes pretty damn quickly after that. Big time volume. ADX looks great. We've got stochastics breaking up through 50. It should be a very nice week for Rox next week. I would be looking to pick up more shares on any dips if they occur down to around the 95-cent area. Another one of our stocks that did very well, even with the market selling off, was INUV. We got as high as $1.10 when the market was imploding on very nice follow-through. The spike we had on Thursday was some other chat room that jumps in and out for stocks for a penny. I believe they bought 102 and sold 102 because the stock didn't immediately blow up. It's that kind of market you're dealing with. But those kind of tools give us opportunity to pick up more shares and wait for them to chase higher when it starts to continue to move, because then they go, we screwed up, let's chase again. Very nice action on this one. Of course, it trades on Scamex, so you know what happened in the last few minutes of the day. They were able to push it down to 99 cents, where we picked up some more shares going into next week's earnings report, which I believe they will surprise to the upside. They've launched a bunch of new websites this past quarter. They already report EPS. It's about time for this stock to do what I've been waiting for it to do all year, blow up to the 2s. We've got an immensely strong ADX, as you can see here. Over the last 2 months, the ADX has been over 30. Very, very strong momentum indicator. But if you look here, the stock has been, during this time, as it's been showing this underlying strength, the stock has been in just really a sideways pattern of 90 cents to $1. Bullish divergence, and bullish divergences usually result in large upside moves. So let's see if that occurs this week. Looking really, really nice. One of our other swing plays, SMSI, has actually been holding up fantastic, even with the small caps and the overall market selling off. After that initial spike, we got a dip, we got a spike up to test it again, and it's been sideways action. 120 close would be very, very bullish on this stock, and we'd be looking for a gap fill move up to that 150 zone. Chart looks really good. Again, look at this ADX. Very, very strong ADX. Stochastics breaking up through 50. Looks great. Now, a couple of our other plays didn't do too well. EMITF. The penny stocks are really kind of dead, although we did see some penny stocks start to move big time on Friday, so perhaps we're starting to see that tide change. Even though we got stopped out of this puppy, it doesn't mean we won't play it again. We're going to be keying that 22, 23 cent area on it and just waiting for it. ICANN, another one that we have been massively patient on, still held that 40-cent support. That 50-day, a close above this 50-day moving average is going to be key for the stock, and a large move is going to come on this stock. It's just a matter of when, not if, in my opinion. And it'll probably come on a nice press release, and then boom, off she goes. So we don't have a whole lot of plays that we're sitting in right now. Everything's mostly intraday day trades. So, having a couple of swings like Rox, INUV, ICANN is okay as we sit in a high cash and just wait out this snoozer of a market. Two other plays I wanted to make a quick mention of. PTN. One of these days we'll get that freaking deal with the pharma. Until then, dead money sitting around waiting for the boom. But the other one I wanted to talk about is Apple, that we picked up a couple of weeks ago, 91 readying for that breakout. This stock is looking mighty, mighty nice, getting very close to that $100 breakout zone. On the break of 100, we should see 110, 120 rather fast, even though this is a very extended chart. But this is Apple, and recall what Apple can do, especially when money gets scared. It always finds its way back to Apple. Could do the same thing here on a $100 break. So on a $100 break, be looking to pick up some longs, possibly with a 98 stop, 105, 110 target. So that's it for the video, guys. Have an awesome weekend. And, I just wanted to throw that out there. Don't get frustrated with this market right now. This is typical. This is normal summer trading. I know there's a crap load of negativity out there in the media, but that is all the naysayers who missed this rally. These top callers have been calling a top for the last 3 years. They've been wrong for the last 6,000 points. They are full of shit. We still haven't seen mania like we saw back in the dot-com days. I mean, these idiots are comparing this to the dot-com days. It is not like the dot-com days yet. Now, granted, some of the stupid action we're seeing on stocks like Xylo and others is madness, but we're not seeing that throughout the market. The shorts have not thrown in the towel yet, so I still think we've got another power move higher in the market. Now, does that mean we couldn't see a decent 5-10% retrace in the market? Of course not. That would actually set us up fantastic for the year end if we saw it. But, as for now, we're not playing big. We're not playing a whole lot of plays. We're just biding our time for when the really good market comes. There's no need to be out there flipping trades for 1 cent, 2 cents to other traders. It's not what we do. So, just be patient, guys. I mean, look what Friday gave. Dead market, and we still were able to pull off a, 20% move on big volume on a nice chart breakout play. So there's plays out there. We'll find them. And until then, we'll just hoard our cash and wait for those trades. Again, have an awesome weekend, guys. See you all in the chat room Monday. Bye.